Welcome back. Again, I'm John Shepkoff, and today what we're going to talk about is why don't CPAs agree of not paying off your home? In fact, most CPAs would say don't pay your home off. And you know what? If you weren't going to learn what you're going to learn in this video here, I would agree 100%. I've talked to hundreds and hundreds of CPAs. Once they talk to me, and those CPAs actually come with me as well, and they get my program, and once I teach them and I mentor them, I show them why, they go, wow, I didn't realize that. But the problem is, when you tell your CPA that you're going to pay off your house or you no longer have a mortgage, he starts to panic and he says, oh no, you can't do that. You need a write-off. You need a dependent, and your house is like a dependent. I agree. But the problem is he doesn't know, or she does not know, all of the facts when it comes to paying off your home. So let's just use an example here. And we're only using an example. Let's say that you're paying a total of let's use a bigger, you're paying a total of $30,000 in taxes that you pay in the federal, you pay the state, and so forth. $30,000. Okay? Your house, next year, your house is now going to be paid off. Now mind you, $30,000 is your taxes that you pay. You're paying somehow. You're paying through it, whether you pay through your W-2 or you're self-employed, you're paying $30,000. Now it doesn't mean you're given $30,000, but you've paid a total of $30,000 altogether. Okay, so that's your tax bracket. Next year your house is going to be paid off. And if you're still at the same job, making the same amount of money, and everything was perfect in the scenario, they didn't change any of the tax laws, and you still, the question is, how much is your tax going to be? It's still going to be $30,000. There's nothing changing. The only difference is now your house is paid off. So what happens? Well, what's going to happen is your tax bracket is going to drop in half, approximate. Now, why is that? Because you don't have the dependent of the house or the mortgage, in other words. So you went from $30,000 to what? $15,000. Okay? So now you have $15,000 extra that you're no longer paying in taxes. You with me so far? Let me say it again a little bit slower, because I got to make sure everybody is with me on this, because we got to understand this. You're paying $30,000 in taxes to the federal and state. Your house is paid off. Your taxes are going to drop down to $15,000. You're not paying $30,000, you're now paying $15,000. What happens to the other $30,000 now that you have no dependent? Here's the problem. Remember, nothing's changed. The only thing that's changed is your house is paid off. So what do most people do? You go out and you buy a car, a boat, a goodie, some sort, and let's just say you bought yourself a new car, and let's just say it's $15,000. You just shot yourself in the toe, in so many words. You did wrong, because you shouldn't have done that. What should you have done? Well, what you should have done is you taken that $15,000 instead of buying the car, because remember, you're at $30,000. It dropped to $15,000, but there's $15,000. What do you do with the $15,000? You have to take the $15,000. Pay attention, because I'm now teaching you how to build your retirement. You take the $15,000 that you would have been giving in your taxes. You have to take that $15,000 and you have to pay yourself. That's right, you pay yourself. So you have two choices. You cannot pay yourself, and I guarantee you're going to pay it to the taxes anyway. Or you can take the $15,000 and you pay your retirement. So whatever retirement that you have, I'm not going to tell you get into that kind of stuff, because that's between you and your person that you're working with. But you put the $15,000 into that retirement vehicle, whatever that thing may be. That's where every year you have to put that $15,000. That's only one part of the puzzle now. Okay, I'm showing you how to build a retirement. Number two is, let's just say, for easy numbers, because I can only put so many numbers in my head, that your payments are only $100. I know it's just a number I'm throwing in there. It's $1,200 per year. 100 times 12 is $1,200 for your mortgage payment. This is just for easy numbers for me, okay, and you, so we understand we're on the same boat. What do you do with that $1,200 that you normally were paying on your home? No, you don't go out and buy yourself another car or something like that. No, you don't do that. You take the $1,200, or in other words, $100 a month. You put that into what? That's right, you put that into your retirement. Okay, now are you getting the picture what I'm trying to tell you? Remember, you no longer have this house payment of $100 a month, right? So you take the $100 and you have to take that $100, and where does it go? It goes directly into your retirement. You don't spend that $100. You can't. Trust me, you don't do it. It's better to pay yourself than have to pay taxes. Pay yourself first. Take the $100, put that into your retirement. Trust me on this. I'm showing you how you will never be dependent again from the government. Promise you, okay? And if you do exactly what I'm showing you, there are people, many people, that will have $1 million retirement in place when all said and done. Now, wouldn't that be? And you didn't do anything extra. All that you did is you controlled it. Now, if you were to explain exactly what I explained to you to your CPA, I promise you they're going to go, oh, well, in that case, yeah, what you're doing is correct. It's okay to pay off your house because now I understand that you're taking that money and you're putting that money into your retirement. Yeah, I agree. Now you're not paying taxes, but you're putting it into your retirement. They will agree with me 100%. Once I tell the CPA the whole story like I just shared with you, they all agree. And they're going, wow, you know, and many of them have no clue, okay? They don't understand it. I do understand compounding because I've been teaching compounding for over 30 years, my friends. And compounding is where it's all about. Compounding is why your home gets paid off. Compounding is why you have a retirement in place. Why you're going to have money when all said and done, you'll have that money. Okay? If you do exactly what I'm doing. And it's going to only cost you a few pennies on the amount of money I'm going to save you, and you just go up there and you pay for the program. Look at what you're going to get in return for your money. You pay it now and you're going to have it later. Now the choice is up to you. You want to wait and to get my program? That's up to you. I do not twist anybody's arm because first of all, I'm not going to get rich off of the small amount of money that I'm charging you for my mortgage program. I'm not going to do it, okay? I do this as a courtesy to help those people, and I've been doing this for over 30 years. Remember, the money that you put toward your principal on your home goes directly to your bank. It's approximately 90% that's going. It's the amount of money that you pay your bank that goes toward the principal. It doesn't go into my pocket. It didn't go into some other third party's pocket. It's going directly to your mortgage company. By paying off your mortgage and by taking the amount of money that you normally would put on the payments on the house now directly to your retirement and taking the money on your taxes that it got dropped and putting that toward the retirement, I promise you, you'll be set for life pretty much. A lot of you will because you follow this very simple formula that I've now trained and coached and mentored you on. If you please, okay, please give me a thumbs up that you like what I've said, okay? Number two, share all of your friends and family. You know, have them come out, look at this. For every single one that personally comes, that you personally invite, okay, I will give you $100. I'm very good about it. You can see I'm not making money to begin. I'm making very little to begin with. Plus, I'm even giving you $100, and it's all about helping people. That's what it's about. It's helping people, okay? That's why I do what I do, because I want to help as many people. My legacy is to help as many people as I can. This is strictly a word of mouth type of thing that I'm doing. I've been doing this for over 30 years. I have taught hundreds and hundreds and hundreds and hundreds of people all over the United States. Lots of people. And I personally have paid off 4 homes, and I'm working on my 5th. I'm the guy who's actually in the trench. I'm the guy who's actually doing it. I'm not the guy who just gives you a lip service and says, do this and do this and do this, and I have nothing to back it up. I'm the guy who's actually been doing it. That's the kind of person you want to deal with. The person who's been doing this, okay? Not someone who's going to give you a lip service that says, oh, just do this, and you don't know for it. I have been teaching it, and I've been doing it, and I've taught hundreds and hundreds. And at the very beginning of my stage of doing this for 30 years, at the very beginning, I never charged a single penny for what I did. Nothing, because I had to absolutely, positively make sure that my programs absolutely work without a shadow of a doubt. Every single bank accepts my mortgage coupon on there, okay? The only ones that it will not work, the only ones, is number 1, okay, if it happens to be a credit union and a private person who does loans like me. I'm a bank for 2 private people, and the reason is because we do not securitize the loan. Means we didn't sell them on the market on a stock, and that carrot becomes juice, and the juice becomes the the stock itself. And you know that if it's been juiced, it can't get back to a carrot. And if it's been securitized, that means your loan is being serviced. That's right, it's being serviced. It means that your bank does not own the loan. And what is it that I'm going to show you and have you do? The money is going to go directly to your bank. Okay, we can't change the first part, but we can massage the second part by giving the extra principal payment directly to the bank. You go up there, you pay for the program. You see I charge very little on this, and I'm even willing to give you $100 as a referral fee for everyone that you bring. So you can see I'm not making anything out of this. I'm here to help people, and I hope you are too. Give me a thumbs up that you liked what I have here. Pay for the program. Send me an email. I will give you all the information that I need from you, because it's going to be a 2-part. Then I'm going to send it to you, and then you're going to send that back to me. You'll have the program. You'll be set. I promise you, you will be very, very happy in the long run, and it only costs you a few dollars. That's it. Again, I'm John Shepkov. Please give me a thumbs up on this video. I appreciate your time, and I'll talk to you soon.